Welcome, welcome. How's everyone doing? Group was real quiet today, so we'll see how turnout is today. Hope everyone's doing good. Welcome, welcome. How's everyone doing? Everybody have a good day today. It's a pretty fun one. Couple of nice trades to be had. Oh, my day was good, Rudy. Just took a few little trades, nothing too crazy for me. Had a nice little sell-off. Didn't expect a $5 drop today or whatever. What about you, Rudy? How'd you do? Yeah, Apple was a payer today. Broke out of that range we were talking on Sunday. We were saying wanted to see it below here, did offer, I mean, even today off that open, that was a pretty nice short up to those, attempted bounce from yesterday. You can really be short anywhere here with stops over those. So nice one right there. Oh, good to hear it. I'm doing good. Thank you for asking. Oh yeah, nice. I take you took it right around there, Rudy. That's a nice one. Nice little sell bounce. Perfect. That was a good one. We got Lambos in the house. Just give it another minute or two. Yeah, I had a pretty sick one on spot. I mean, I wish I would have taken those ones for anybody who follows my tab. I wanted to short it here, but we were getting all that buy-in on XLE. So he took that sell and I shorted this bounce up to here. So I had a nice entry on those. Then was out after this one, really no. I didn't need to hold past there. There was no reason to be greedy on that. But nice one. And then I hit some calls somewhere around this consolidation too. Um, just if anybody's curious, I was just watching this little trend action as we've been talking for and got the break above it, pull back to it. So I ended on one of these two candles. No, my stops would be, somewhere down here, 20 cents or so. No big deal. Welcome, welcome everybody. How we all doing? Hope we all had an awesome day today. It was a pretty fun one. Curious to see what tomorrow brings. We'll get going here in 1 second. Yeah, the XM really took that bounce, you know? Finally, I mean, we've been talking about, obviously everybody's in that thing just absolutely obliterated still, you know? But we've been talking perfect pullbacks that it might break that 200, look for it to bounce off this trend. So far looking real nice. Unfortunately, we had the old, 20 SMA right there for the market to reject basically right at. So I think the oil trade is far from out of the water. Even if you look at XLE, still rejecting that, rejecting the trend. So we'll see what happens tomorrow. Tomorrow's a big old make or break on tomorrow's the make or break on the oil trade, I gotta believe. Oh wow, we got some OGs in the house tonight. Okay, well with that, welcome everybody. Thanks for being here, Dirty River. Happy to have you. Tonight is, as I've been telling everybody, I'm working on my series. I think it's going to be like 9 classes or something. This is number 6 tonight. And so all I'm trying to do is get all of my lectures recorded kind of in a row so it's easy for me to organize. And then I'm going to try to get everything posted in my tab so that it will be easy access, hopefully. And then if you ever want to know, my opinion, or you want to watch a lecture on what things we've talked about, support, resistance, trends, we're going to do price action, opening range, EMAs, SMAs, all of that good stuff. How to trade in trends, how to trade in ranges. We're going to kind of hopefully have all of that consolidated to my tab in an easy to access order so that if you ever want to know what I think about things or, my opinion on things and maybe I'm not responding, you should be able to find those answers in my tab. So hopefully that'll be working sooner than later. I'm kind of waiting until everything's done just so that I can get it all in there right away. But with that, tonight we are doing opening range. As most of you know, I trade it all the time. It's really, really simple. And so I want everybody to trade it. I get a lot of DMs from people. A lot of people tell me that they're finding a bunch of, success with it. It's a super simple strategy. It's mostly based on statistics in the market, and one thing the market always likes to do is repeat itself. The market does the same thing over and over and over again. And so we as day traders, have to we have to look for those things in the market that will, make our lives easy. And so that's that's why I try to teach the opening range is it has some very specific rules. And because it has those specific rules, it makes it so we put very little risk on a trade that has an overall pretty high likelihood of working out. And so we're just going to start on the short time frame chart and talk about, what the opening range is, how to chart it, blah, 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 all of that stuff. We're just going to start with a blank chart. I'm going to take all the indicators off for now. When we get later into this, I'm going to show you a couple that I like to use in conjunction with the opening range. But what we're initially going to do is just talk about how to identify it. We're going to talk about the opening range that I personally use. All the statistics, there's the guys out there trying to push like the orb strategy, things like that. It's all just information from Al Brooks. They all took, his information, his research, his data, and then tried to relabel it as their own and pretend that they, made something up. And Al Brooks has thankfully released basically all of it for free. And so we get to use it to our advantage. And so the opening range that I personally use, and for anybody that, goes in my chart or in my tab, this green box that you see is the opening range. And the reason that like I make that post every single day at 8 o'clock or 11 o'clock Eastern time is because that is when the opening range that I use is personally set. And so what do I look for? I look for the highest high and the lowest low in the first hour and a half of the day. And so what I personally do is I just draw a box around it. So it's right there, it's in your face. It makes it, very simple to understand and know where to be trading, know how you want to be trading at those locations. And so we can see today that, you know, really this is the 11 o'clock candle. And so it's not the low. You won't always set the range right at the low or right at the high, but what you are looking for is the highest high and the lowest low in the first hour and a half of the day. And so why do I think or why do I personally use that first hour and a half of the day? And it comes back to, you know, this is all statistically based. And statistically speaking, by that first hour and a half of the day, you're talking a 90% chance that the high or low of day has been set. There will be days where it doesn't work. You know, obviously the market likes to take really crazy turnarounds on us, especially this one that we've had. We've seen plenty of days where, you know, we buy up big and we sell the whole move off, or we sell off really big and we buy at a fresh high of days. So, you know, we do see that, but we can still use this to our advantage. And so the second statistic that I put with that I always want people to remember is that most breakouts fail. And so what do I mean by that is, you know, generally speaking, if you have support, if you have resistance, if you have EMAs, if you have trend lines, whatever you trade, it's pretty rare that on that first attempt of something, it's going to break, or the second attempt, or the third attempt. And so statistically speaking, 80% of those breakouts fail. So we want to use that to our advantage with something like the opening range. When we know that 80% of breakouts fail, we don't want to be long at the top. We don't want to be short at the top. You know, you will frequently see double tops, double bottoms that are set right at the opening range and will almost always provide a nice trade for you. I do want to point out, you know, like I said, I do the first hour and a half of the day, which on this day is, you know, technically this candle, but this is the lowest low. This is the highest high. Well, you know, if you do an hour into the day, you're still, you know, 80% chance that the low day has been set, you know, 70% chance, something like that. If you're 6 or 7 candles in the day, you're still talking a 50% chance that it has been set. And so that's something else I wanted to touch on with the opening range. This is how I traded. This is what I consider the major one. But for anybody who went into you know, for anybody who, you know, goes into my tab and sees these things and then comes to my lectures and listens to them, one of the ones we talked about last week was kind of breakout mode and failed breakout mode. And what do we look for in that? We want to look for a big push up followed by a big push down and then a reversal. And we want to trade in that direction if it holds. And so this is kind of one of those days where we saw it today, you know, high a day was technically set on the fourth candle of the day. So we know that we likely want to be short under that. Now we go into this second statistic over here of, you know, most breakouts fail. So I think some of the most powerful things you can do is run a trend line. You know, we see the market sell down or bought up, sell down, and take a bounce about halfway up of the full move up. And we get to see our lower high be set right here, our first good lower high of the day. So now we have our 90% chance by this point that the high or low of day has been set. So we know that we are likely going to be trending down because the second part of that statistic is if we come to these lows, there is now a 90% chance that we will either have a trend day or a range day. So we need to simply look at the market and say to ourselves, you know, what do we see the market doing right now? For now, we see it trending down. So that was even something that I mentioned in my tab. Again, we had, you know, a little push going up here. You can call it a triangle wedge, whatever you want. I just think of it as two trend lines. We saw these lower highs being set and look to get short. I talked about a short in my tab right here. I unfortunately didn't take it. However, I waited for this breakdown to come and push us up to here. Well, now, as we read the price action of the day, we get to come back to the opening range down here. So this has already been set by the time the market begins trading here. So how can we use the opening range to our advantage now? We do what I call, and I think what Al Brooks calls, you fade the extremes. The market has a very, very amazing way of printing candles that will make us think one thing is going to happen and then completely reverse on us. And so when we know the market likes to do that, we know that 80% of breakouts and breakdowns fail, and we know that there's a high probability lower high of the day has been set. Well, now we basically have one touch of this low. So we want to assume right here it is likely not going to break on this first try. So this is one of those opening range trades that I love. I didn't take this trade today because I was short already, and I wasn't quite ready to fully exit my short. So I was already short. However, these are those trades that you can see on the opening range almost every single day. This isn't a big move, necessarily. I mean, what we get out of it, it would have been 30 to it would have been a nice 50-cent move in one candle, which, as we all know on SPY contracts, can pay very, very quick. And it's a wonderful scalping opportunity that presents itself almost every single day. And so when we see that, we buy calls and we know where our stop is. We have a very, very defined stop. Any sort of strong selling below this range. And because we know the range has been set, once the range has been set and you're at these extremes, we have a 90% chance of a trending day or a ranging day. We're already trending. We're even setting a more dramatic downtrend here. But we're already trending. So we know if we don't get a push back up very quickly off these lows, you need to treat this one as a scalp. This gave a very nice breakdown today. A lot of people don't know if a lot of people don't quite realize, but there was likely some news backing this sell-off, a little bit of news out of the Russia and North Korea thing that's going on. And so I got to believe that played a pretty big role. The timing lines up to get a nice big sell like this. However, when we see the close outside of the range, pretty bearish candle closing outside of the range, we can now use it in the exact opposite way that we were using it previously. Any sell down to these lows, we want to try the bounces as they come. Well, now we go to our 80% of breakout statistics fail. We got to test and another and another and another and another. And the market is trying to buy here, but failing over and over and over again. So once we get strong bearish candle closed outside of here, this can offer, and today is unfortunately not, depends. Unfortunately, not the best example because this thing sold and then dumped. This was a very quick candle. Frequently, you will be able to get a retest. So as I said, this is just kind of the inverse of the trade that we previously talked about. You short here, and any break back inside, you stop out. Even, you can even widen it on a trade like this to kind of the top of these candles. That's where you want to be out of the trade. But all of these are just, you can see we have a trend line and we have our opening range. All of these are just trades based on the opening range. And so it's an extremely easy strategy that works over and over and over again. And we can use it in every single day. All of these statistics apply to all the other stocks as well. If you like trading Apple, if you like trading Amazon, all of these things work always. It is something that, when people ask me for, charts or whatever on trade floor, something that I'm always going to take note of is where is it trading, in relation to the opening range. If we're outside of it, then I'm like, outside up, I'm likely looking to buy dips. If we are outside of it, like we were today on SPY, I'm likely looking to short really any bounces. One of the other things you need to do, because, I always recommend to people, a 9 EMA is not going to make you a great trader. You always need to take the really big picture of things into account. And so today we just happen to have, and it won't always be this great, today we happen to have a really prime example of some of my friends were trying to get short down here. And I told them, no. If you are already short from up here, then great. But right down here, it starts to get a little tricky to be short. And then, as I said, this one happened so fast, it would have been hard to catch it after the close of this candle. But one of the reasons that I gave them this, and it is something that you'll frequently see happen in the market, is the ranges will be set kind of around important levels from the previous day. So if we take yesterday into account, kind of look at this, this high, as well as where did the market close? And we can see that after, and yesterday was a wild one, or 2 days ago, wild one, nice consolidation. This is where the market ultimately failed to continue to push higher till obviously after hours, but that's all it could do during market hours. So when we go forward to today and we see that is exactly where we were getting this consolidation, it gives us that additional confirmation of when the breakdown comes, we can look to be short. Any bounces back up to here, I mean, even if you want to, if you want to drag the trend line out, any of these bounces back up to here, same rules apply. We have broke out of the opening range. The trend is down, 90% chance trend continues, 80% of breakouts fail. When we're on our third test, look to short this, stops back in the range or this consolidation. And so always take note of where the opening range is being set, and it will frequently provide you a good trade. And as I said, it works on every single thing. Another way that I personally really like to use it, and I know that I'm a little bit lucky because I do have like I got a few screens, and I have one big screen that I never change the charts on. I just have Apple, Amazon, Microsoft, Nvidia on there. I used to keep Tesla, but that thing's such a slug. It's not doing anything, so I don't really care about it. So replace it with Nvidia, obviously, mover, huge market mover now. And so I have the opening range, and for anybody who wants it, I have this pinned in my tab. I actually have a script for it. So all you have to do is add it. When you add it to your chart, it will chart it for you. And that's what these blue lines are. So I just have that running on those charts that I care about. And why do I watch Apple, Amazon, Microsoft, Nvidia? Because they're some of the biggest parts of the S&P. I like to trade the S&P. And so I want to know what those stocks are doing. And something that I will use day in and day out is I want confluence on my opening ranges. If we got Apple, Amazon, Microsoft, Nvidia all stuck in a range, or even three of them kind of stuck in their range, then I'm going to be planning on SPY kind of trading within that range. If we have a bunch of them breaking down, today we had some nice selling going on. We look at Apple, obviously sells right down to the low of that, sells low and stays low. We look at Microsoft, sells off real big in the morning, find some buyers, but sells off real big in the morning, still within the range. We look at Nvidia, bad one, loses opening range, continues to sell all day long. And then I don't remember which one I missed. Amazon, only strong one out of the strongish, only strong one out of the bunch. So when you got 3 of 4, 2 of 4, and one of them in big sell mode, you can start to look at SPY and say, hey, I want to trade short. We got Nvidia getting clobbered. We got Apple having a tough day. Microsoft sold early, found buyers, but never even made it close to high a day. You want to be starting to look to short those things. I'll always look at some of the major sectors as well. I keep these ones up. XLF was one of the standouts today. XLE, one of the standouts today. So then you start looking at some of the other ones, and they're getting a little bit beat up, And so we want to take the whole market into consideration before any trade we take. And the opening range is one that I can look at it and I can say, okay, I want to trade. I want to trade here. I want to short here. Do I want to attempt to short these highs? Do I want to buy this breakout? Do I want to wait for the second breakout? Trades are just available market wide. You can use them everywhere. Nvidia, as we saw, was actually a nice one today. The breakdown with the nice retest, failure of a double bottom and big selling. You can use it on every single thing you trade. And if you're, it doesn't matter if you're a brand new trader or a super advanced trader. It's something that you can glance at very, very quickly and say to yourself, what's going on in the market? Somebody asked me, oh, should I buy Nvidia calls? And I look at Nvidia and it's well outside of its opening range and it's seeing like drops. I'm obviously going to tell you no until we are back above this. And so it just gives you that very, very nice, simple line in the sand of how you can trade it. On days like this, and what I'm gonna remove my script. On days like yesterday, we kind of had big push up, big push down. Let's see, this is gonna be our opening range. Right here is the opening range. We had big push up, big push down. Any bounce up to be shorted, paid. Any bounce up to be shorted, paid. Any of these dips down, I mean, these aren't low enough. This one's really not low enough. But this dip down, wonderful dip by opportunity, knowing where your stops are. So it can just show you where the range is on the day. As most of you know, I like to scalp. You'll see trades like this all the time in my tab where I say, oh, looking for calls or looking for puts at these highs, and maybe we get blown out, but I know my risk. I'm risking 30, 40 cents upside here. To potentially, you never really want to plan on it, but get that entire $1.20 move down or whatever it is. And so that's how I use the opening range, day in, day out, super, super simple, works on every single, ticker that you can think of. I use it for whole market context as well as just trades for me. Whether it's quick scalps on some days, if we go to my real chart, we can see how I was trading on these days. Any sort of moves up, I was looking to short those trend breaks to the upside. I'm looking to long those kinds of trend breaks. Just keep it very, very simple. If you go through my chart, every single day has one. Obviously, you aren't always going to have days like this, but every single day will have it. I love looking for things like this where you kind of get a lower double bottom sort of deal going on here that ends up taking the bounce for you. These breakouts with any of those pullbacks to it and buys back over. We'll drag this one a little further. I trade it every day. Pulls back to it, break back over, look to buy those calls for a scalp. Any touch of it, look to buy those calls until it fails. Again, touches down here. I guess we weren't set here. But any sort of pullbacks, always take, your whole market context into account. But breaking trends, pulling back to trends, these start to be reasonable buys for you, where you aren't chasing, you aren't doing any of that stuff. You aren't the person that's seeing like 3 big ugly sell candles and saying, do I buy puts here? You never, what the opening range can really do for you is help you kind of key in on where things are likely to bounce or likely to reject. A lot of people like to guess, a lot of people like to get in early, trend breaks are the prime example. Everybody wants to be in for the trend break, but you're frequently buying too early because you're buying big candles like this before breakouts actually occur. And so you don't, the ranges and trading the ranges and looking for these statistical likely bounce points or rejection points can often provide you very low risk with potentially high reward trades. As I said, you guys see my tab every single day. I post them all the time. It doesn't matter if it's, QQQ, it doesn't matter IWM, it doesn't matter what it is. I am trading these every single day. And they provide, as I said, double tops, double bottoms. They provide those kinds of things over and over and over again. And then if we remember the other statistic that I was mentioning, 80% of breakouts fail, we can use things like this, first double top, likely going to pay. Triple top, likely going to pay. But when we've tried it, 5, 6, 7 times, you likely don't want to be trying to short this one because you might get blown out. If you do get blown out, it's frequently going to be, 20, 30 cents. It's not going to be some gigantic loss or anything like that. But it provides that lowest risk entry. As all of you know, I think entry is the most important part of virtually every single trade. It can really, really increase your profitability. And especially for big port and small port people, not staring down losses is crucial. If you have contracts, they're always going 40, 50, 60% red on you before they go green, work on those entries. And what I like about these types of entries, shorting the obvious rejection places, buying calls at the obvious bounce places, what I like about that type of trading is your risk is small. As long as you follow your rules, you will never I can't say never because of course you can get explosive candles, but you will never take the big losses. You'll just be able to eat your 10 or 15% loss and move on. I'm of course never going to set a stop based on something like that, but here's a prime example of one where, we had our first touch of it. If you tried to short this, you likely got stopped out on this next candle, which is fine. You did take a loss. Like I said, it's going to be 10 or 15% loss. And then you can see here, we're holding it. So you don't want to be short anyway. The market tells you very quickly. Obviously, if you did hold for a little bit longer, you could have got out around break even or whatever it was, even a smaller loss. But the market tells you if you are right or wrong very quickly when you're trading range breaks, same as gaps, all that kind of stuff. But again, shorting these highs, longing these lows, just extremely simple trading. As you guys all know, I like to trade ranges. And so this is the main type of range trading that I use. I don't, I use support and resistance, and I use trend lines, and I use the opening range, couple of EMAs, very, very simple. I mean, as we are getting further and further into this series that I've been putting together, we really I can just show you, exactly what my charts look like every day. And hopefully, you guys all know what we're looking at, and we can use that to our advantage over and over and over again. And so today we'll go to this one because I did on here. Today, really simple one. Obviously, squiggly lines can be a little much for people. That's fine. If you want to use less EMAs, great. But we can see right here, all EMAs are pointed down. Hourly 20s working its way down. Everything is working its way down. There's really no reason to be looking for calls, even for these bounces here. Obviously, they could have paid a couple of times, but there's really no reason to be looking for calls when the market is telling us that it's bearish. This is all stuff, you guys have seen from my lectures. Even, as we're getting these sell-offs here, we're getting increased selling volume during this consolidation. So something like that tells you, hey, you can look to be short at least to the lows here, and then just have your stops up there around entry, to see if you can end up getting a breakdown. Like I said, this is news. Don't get sucked in by that kind of thing, but just keep it nice and simple. Few EMAs, some VWAP, some trend lines, and anybody can trade this. Anybody can get out and chart, those major highs and lows on the daily, trade around those, trade your opening range, trade whatever, or whatever you like, and make it simple on yourself. Hey, if we're at lows, I'm looking to buy calls with stops below there. If we're at highs, I'm looking to buy puts with stops above somewhere. And so really that's it. I wanted to try to leave a bunch of time. We have a small crowd tonight. I think I saw 40 people. Mostly got 35 of us now. Plenty of time for questions. And then if we want to go back and maybe analyze some charts, I'm hoping some people have some trades that maybe they took that worked out or took that didn't work out. And we can maybe apply the opening range to some of those charts and say to ourselves, well, had we had this opening range on here, would this have saved us money or made us more money, or what could it be? I know that I saw, yeah, we got insanity going on in here tonight, huh? Wow. Oh yeah, I see one back there. Do I use it for any ticker? Yep, I use it on everything. I do use it on SPY every single day, but like I showed, I like to just pull up that script and have those charts running. It puts the blue lines on there for me, so I don't have to do anything. I can just glance at them, and as I said, use it for, my bias of the overall market. Let's see. Yep, we got Mayhem on here. Let's see. Oh, nice XOM. Yeah, a lot of people are hurting on that one. Yeah, and just Mayhem. Do you want the candle close above or below the range to stop out? So that's very difficult. What I always teach with any sort of trading and any sort of stop out, we'll go to this one because it's a little cleaner. With any sort of trading, any sort of stop out, I always have two things in mind. I'm going to, we'll use today as an example, and I didn't take this trade, but I would understand if you did. Perfectly reasonable trade. Say you get some calls here, maybe you don't get your first sell. So you're still in it. Well, what I'm going to say to you, is you want to see a candle close below the range with some sort of volume or something to back it. And so, that's kind of what we see here. That's what I was pointing out. The market's not going anywhere, but there's getting to be more and more sellers on these candles. And so when we see that, we likely want to take this stop out. And, we can let this candle close and just take the stop and say, hey, we're done. Well, maybe you wanted to widen it out a little bit. You need to have something in your mind that is also just a hard stop, where if we hit it, you're getting out of the trade. I don't know if it's this 548 for you, maybe, but when you enter these contracts, and I like to look at delta. I like to know how much I'm going to lose before I'm in the contract, obviously. And you buy some at the money puts, you got about 50 delta, and we're going to give up about 50 cents. So you're going to lose 25 bucks if we're down to here, and say that is my limit. So this one, you might be getting out mid candle saying, okay, that's too far. But the hopeful stop out is just some increasing volume, seller volume down here. I think we had big seller volume going on at this time. And so, that's the hopeful stop out. And then this is what I call a protective stop, where it's protecting your money, and maybe you get the bounce off of there and you could have reduced the risk, but still, if you say to yourself, the most I want to lose is 25 bucks, that's the most you can lose. You need to follow your rules. Rudy, great question. You're asking if we break down, and I think we had one of these. If we break down and then, oh, wrong charts, 1 second. If we break down and then we get, take a nice sell, let me find it. We break down right here. So, we have the opening range, we're set. I guess it should even been a little bit lower, but whatever. We break down, we buy back into it, we break down again. Yes. So now at this point, and we have a couple other things going on here. Obviously, trend breaks here, strong buying candle, increased buyer volume, back up into the opening range. Now that we are up at it, we're closing inside of it. This anywhere along here is a reasonable entry for a long with stops below here. This one can kind of work the opposite. We break down, obviously, right here, a reasonable enough entry for short, stops closed inside of it. But once we've done, broken back into it and we are inside of it, we can start to look for the opening or for a nice bounce off of that opening range. The other thing that I always recommend you do is, as we've learned in our trend classes lately, identify what the market is doing. The market is selling down. There's no denying it's selling down. I'm sure we even had a trend kind of going like this, no denying the market is selling down. However, we've had a nice push down and then a push up with a pullback. So as we learned in our trend class, that is all you need to have a trend. So at this point, the market is set a higher low. And so we have one touch, we have two touches. We now have a trend here. So maybe you don't buy this one, maybe you see this pullback, and then you look to buy somewhere around here on the next candle because you say to yourself, okay, higher low. Trend, the trend has the potential of reversing here. So any entry around here is perfectly reasonable, looking for that bounce up. As far as how much of a move do you want to look for, what I like to do is kind of look at what the first move was before the pullback. So if we take a bounce, looks like a buck, a buck up, I'm going to look for a pullback, and then I want to catch another basically dollar up. That's the move that I'm looking for. Happens to line up with those previous highs, ends up to be a really great place to get out of. But yeah, great question, Rudy. If you reclaim it, and of course, it can work the other way. I don't know if we've had many of those lately. The old break out upside and fail back in. We've pretty well just been going up. Here we go. And again, I like to always preface this, this is hindsight trading. We get to go back, look like we're the best traders ever. Maybe you don't see this during the day, but we have opening range set. We've now we're attempting breakouts. Trend is strong up. We're attempting these breakouts. This break back in and consolidation at this range, perfectly reasonable stop. I would have, obviously candle close with volume outside of here is stop, and then protective stop up here, a little wide, 50 cents, something like that. But protective stop anywhere above these previous highs, or look for that move down, This was our breakout move. Look for a nice retrace. This one ended up going more, of course, but yeah, it can work both ways. Gail, great question. I'm doing it on the 5 minute here because the statistics that I gave as far as 90% chance of when you're 18 candles in, 90% chance. 12 candles in, I think it's about 70-75%. 7 candles, 50% chance that higher low of day has been set. Those are all based on the 5 minute chart. But I like to say, first hour and a half of the day is what I use as my opening range. And so even the first candle of the day, you never know, but there is a 20, I think it's 20, I'd have to look it up. There's a 20% chance that high or low of day, of course, we don't know which one, has been set here. So when we're talking about these statistics, I like to do it on the 5 minute. Most of my trading is done on the 5 and 15 minute. I do spend a lot of time on the 15 minute. That's frequently when I'll, mention entries in my tab, is probably because we have a 15-minute candle closing. I like to enter around those things. And so that can be a very, very helpful strategy. It can also help you from getting, worried out of things. Maybe you short this and you wait on that 15-minute candle close and you end up okay. So it's really personal preference. The only thing that I never recommend anybody trade on less than the 5 minute. We see people left and right every single day getting faked out on the 2, 3, 1 minute, all of that stuff. So really never go shorter than the 5 minute. Viral, which time frame and how many candles do you wait for? I kind of just touched on that. I love the 15-minute, but it depends on what your trade is. If we're double bottoming or something like that at the opening range, we'll use this one again. If we're double bottoming down here, something like that, I'm probably going to be on the 5 minute because I want to be, maybe I buy this little double bottom, triple bottom going on right here. We break up and we push back down. My stop's below these lows. I want to be right quickly. So I'm looking for a scalp. If we have something like today where, give me 1 second. We got something like today where I know that we have this major, and we'll just go back and talk about this again. Let's see. Oh, I think it was on this one. I know that we have the major area from yesterday, consolidation here. I know that we have that there. And so if we get any sort of break below there with any sort of volume to back it, I need one candle. Like this strong bearish candle was enough signal for you to enter shorts here. As I said, I was in a little bit earlier up here. And so I was out here. But this candle is big enough seller volume. I'm interested enough to really say, okay, I want to be short here based on one candle. If you zoom out and, to that 15-minute, you can kind of start to see, okay, this candle didn't tell me much. Maybe I can even be short a little bit higher and look to try to catch a move down. So your preference is where you should be. If you don't like taking those very quick right or wrong and one candle moves, then probably stay off the 5-minute and look more at the 15. If you do like a quick scalp, like if you're a proficient scalper, you use limit orders, you're ideally on, Thinkorswim or have active trader of some sort, you can scalp these candles for 20 cents or 20%, something like that, 15 to 30% range on moves like this. So you can scalp those. If you don't like that type of trading, then go to the 15-minute and try to short the highs and know that you have stops above those highs. So it's really up to you. How do I use volume to validate your entries or trades? Kind of like I've been touching on tonight, we can zoom in a little bit on these. There's this common issue in trading where people say, and you'll see it in TradeFloor all the time, oh, low volume day. And low volume it's a double-edged sword. Low volume can be a great thing because that's what that day where, SPY just ran up $8 or whatever, that was on low volume. Low volume grinds and drops can go on all day because there's no volume to really jump in front of it. So all the big money, all the algos really jump on, they just ride the train. It's easy money. Don't fight it, just ride those low volume trains. So what I frequently tell people is don't get caught up in the number. People say all the time, oh, no volume, market ain't going anywhere. And then they miss an awesome move, like right here, people were complaining about the market doing nothing, stuck in a range, whining, 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 and it led into a very awesome move for us. And so what I tell people to do is I like this volume indicator up here in the top left. The main way that I use this one is I want to see who's winning the day. Is there more buyer volume? Is there more seller volume? And the main time that I really pay attention to this one is when they flip. If we had 25 million buyer and seller volume, you can get an idea of if we're trending down and suddenly the buyers take over, you can start to look for some bounces. Then the other side of it is the shorter time frame volume. So what I want to see, and it's different for every trade. Are you looking for bounces? Are you looking for breakouts? Do you have your bias on the day? Like I said, for whatever reason, I was leaning short today. And so I was looking for bounces to short personally. We had that 550, we had that breakdown there. I mean, to me, it seemed like a good day to look to short bounces. And so that's kind of what I did here. We bounced, but look at the volume. Like anytime we had like the green candles, the volume is dropping. So you can look to get short. I mean, it even happened over here. I mentioned it in my tab, and that was part of what I was seeing. We're coming up to trend, we're coming up to VWAP. We have this decrease in volume on this bounce. There's plenty of reasons to be short, but I didn't pull the trigger on this one because there was that buying going on XLE, things like that, and XLF, and then we just needed tech to roll over. And so when some of those tech names roll over, obviously I start seeing increasing seller volume while going sideways after a breakdown. To me, that's a really, really clear sign to get short. Then it happens again here. During this whole consolidation, all of a sudden, volume just picks up. There's more volume. Then we look at these candles down here, and this one's a little different than the one I had pinned in my tab, but the one I had pinned in my tab is also green and red bars. We see right here, seller volume going up. We do have one drop, which could have been a candle that faked you out, but then you just keep looking at these candles, and obviously they go pure seller volume. And then we see the shift right here. All of a sudden, we go to all buyers. We get second all buyers in a row. This is where you want to start stopping out of those shorts. Obviously it's sold a little bit more, but this is likely where you want to get out of those shorts. And so I always look for volume to be coming in the direction that I want to trade. And that's the main thing that I look for. So Ray, I see your question now. This is a fancier one. You really don't need it. The one that I have pinned in my tab is this. Super simple. All it is green and red. That's it. And it gives you all the information that you need. You can see the seller volume increasing along here. This is just super simple. I got it pinned in my tab. It's called buy versus sell volume. Really easy to use, really easy to understand. You can even do things on volume, and I'm not necessarily like recommending something like this. And don't go start drawing trend lines on your volume. But if we have just this decreasing volume and you suddenly start to see these breaks attempting, you can start to think that a move is going to come. And if you're seeing that kind of thing specifically at places like the opening range, it can be a very, very good sign to get in. Or at the very least, if you are in trades going the opposite direction, if you are scalping calls down here and you start seeing this, abort the mission, get out of there. No big deal. You got to take the stop out. No big deal. But you're long and you're seeing seller volume winning. You most definitely want to exit that trade. At least in my opinion, that's how I trade. Okay, and so that's all the questions. So now, if we still got a good amount of people in here, does anybody have, while we got about 10 minutes left, does anybody have any trades that worked for them, or didn't work for them. Maybe you took a rejection in a weird spot. I know a lot of people trade Apple, Nvidia. If you guys want, we can just kind of look at those ones today and analyze some trades around the opening range. If anybody's got them, let's pull them up and let's just see. Viral FDX. I never trade FedEx. Oh, we got a trend break going on. Wow. Okay, well, this one is actually sweet. I like this because it applies to many things that I trade, So the first thing that we're going to take note of, is we got a big range right here. So we already want to be treading lightly up here on calls. We're below that 200 day, we're below all of that stuff. But we zoom into the daily and we look for our highest high, or our lowest low, and then let's see, that's going to end up being our highest high. And not a lot of trades off of it today, but we can see that any push up towards it, and thankfully FedEx is expensive enough. You can get these little $1 or $2 pullbacks and make a little bit of money. But we can see right here, they weren't going to break us out today. The big breakout came early in the day. This is obviously a breakout. You can even be long above here. You can likely be long above this trend with stops below it. But nice little trade on FDX. And then I'm just going to, put a line on here. We'll see where we ended up today. And then go back to that daily time frame and check it out. And we can see you don't really want to be long here. We're going to have this nice little zone right here. And anywhere above, you don't want to be long into this type of thing. You likely want to be short into this type of thing. There is no denying that the market context is showing us a bit of a breakout. However, this is just consolidation going on, over a month now. So be careful on longs down there. Ooh, Disney, yeah, that's one I love because I've just been hammering it. Oh yeah, you can even see where I've been taking entries on this thing. So, and I've been preaching Disney since, let's see, it looks like about the end of May. I think we even hit some back here, looking for the gap fill. So we got the gap fill. Gap is filled. So I stand firmly in my position, and I know there's people out there looking for the 200 day and blah, blah, blah. I stand firmly in my position on Disney that any dip down to basically 99.50 to 150 is worth a stab. And so that's what I have been doing. You can see, I hit it here, I hit it here, I hit the dip this morning. Oh, we got VRT. Oh, King Crab, we got VRT. Oh, we'll pull that up. We'll pull that VRT up. And so I like Disney's beautiful. Same situation. We do have this range here. I don't love calls as much here, although we are having our first close over that 20-day above that trend. There's even more reasons to start looking long on Disney. Really, any pullbacks still down to 150, 101, buy them. No denying we're in a range, so we aren't looking for some huge breakout, but Disney gives us a nice push up to 104.33. Obviously this 103 will be in the way, but 104.33, that'll be a really, really nice trade. Love Disney. Then intraday, we'll remove this, zoom in on it. We know where we're trading. We know we lean bullish on Disney. Here's our lowest low. Here's our highest high, first hour and a half of the day. Obviously, first breakout fails. We get our next breakout here. And though I think it's a bit of a chase that close to the trend, perfectly reasonable entry on Disney. And your stop's going to be like 10 cents below you. You'll lose like $5 a contract. And you end up catching a nice 50-cent move up. That's on Disney. That'll pay you a nice little 10, 20%. Beautiful trade though. Really, really nice one off of there actually. And you even could have shorted this. Obviously, I likely wouldn't because I was leaning long, but nice little breakout, even another pullback to it and giving you right about the same pay on that. VRT for the team. Yeah, this one's good. It's right back to that buy zone I was seeing earlier. Yeah. So trend buy. Obviously, this is when when I was telling MMA and Testy to get into it, worked out really nice. Obviously worked out again. However, we have to start to say first test, second test, third test, fourth test. Do we break down? I still think VRT is likely a buy all the way down to this 85 area, something like that. But nice little chart on it. Oh, wow, this one's probably offered a really sweet opening range today, huh? So there's our high. I'm willing to bet. Yep, that's going to be the low. I mean, and this is another one, again, take whole market context into it. Thing is selling. Really, this should have been shorted here. It also could have been shorted here. And then it could have been shorted here on the close there, the close of that candle. And then really nice sell down straight to the trend. You gotta love it when you get your what you would think would be your exact target down. Oh yeah, it does suck when you get stopped. And that is I will say on SPY trading the opening range, things can get hairy and you can need to widen your stop. That happens a bit less on your individual name stocks. Once they break out, they tend to hold it a little bit better. But with SPY having 500 things pushing and pulling on it, things can get a little bit crazier. Uh CRM. Ooh, man, was this a dip by I missed? Eh, we talked this. I wanted it back down to that 225, but now here we are, back to the top of the range. For me, no, and we know this is the gap, but for me, very, very little interest long without a real reclaim of up here because again, we're at the range. This is going to be the first test above it, first test above that 20 SMA. Statistically speaking, likely not coming. However, beautiful little bounce off of those lows down there. Wow, nice one. Yeah, I got greedy on that too. I wanted the 225 because of this previous candle. Nice king crab. That's a perfect exit. Nice. And I do like CRM, dip buys all the way down to, I mean, really all the way down to this 212. Of course, if you get calls here, don't hold them all the way down here, but look for some of those bounces. Okay, final one, probably Nvidia, which was the money one today. Obviously strong uptrend, super hideous candle on this thing, but it's been coming. People have to book a profit or two eventually. So obviously, highest high, highest low. No reason to really be looking long on this thing. We bounce all the way up to here, and you suddenly have a buck stop out up to there. Pretty reasonable to be looking to get short. We'll turn on the other indicators. Pretty reasonable to get short. Oh yeah, definitely reasonable with all the EMAs right here. Pretty reasonable to get short. However, come down here to the opening range. If you risk the stop out, or if you risk the bounce, which on the double bottom, which understandable if you tried, but this is a really prime example of take market context into account. Big increase in seller volume for this whole sell-off. We're below every EMA. The EMAs aren't just pointed down, they're borderline vertical down. So not the setup you want to buy into. You could have looked for the bounce to the 20. It looks like you got it, but still not a setup you want to buy into. What you really want to look for on something like this is the breakdown. We're, looking back, of course, we say, oh, easy, short it right there on the breakdown and the retest. Did you actually have enough time to do that during market hours? Probably not, but that's where you would want to be looking for it. And then again, your stop is going to be, I mean, maybe over the hourly 20 because it's Nvidia and it makes big moves. So you do need to widen that stop out a little bit, but real beautiful one off, right there. Not every day you're going to get a $6 drop or more on something like that quickly. Oh yeah, Nike. Me and Empanada talked that one. Gosh, a long time ago. Yeah, I think him and I were talking it somewhere back here. It might have even been all the way back here. Yeah, nice one. Got that having a rough go still. I mean, not to say it's wow. But yeah, needs to get back up, needs to get this here gap filled. Uh I don't hate over that 96, you can look to get long 98 and potentially finally get the gap filled, but we'll see. Pretty nice one. What they doing today? And nothing really for us opening range wise. We got our high all the way up here. Could have taken the short below, obviously worked. Could have taken the retest above, obviously worked, but nothing too great on the opening range for us on that one. Not really even a good reason to be short here. But yeah, nice one. Nice one. And Nike longer term. I like that. Weird candle. Something's going on. Oh, earnings next week. Ooh, yeah, earnings next week. worth having your eye on. See if that thing wants to get moving. I might actually watch that. Thanks, Viral. Try to remind me to look at Nike. I like that a lot. Okay, well, if that's gonna do it, um, thank you all for being here. I really appreciate it. 6 o'clock, see if you leaving. Thank you so much for being here. Love the opening range. If you have any questions, I know it's kind of data driven and there's a lot of, if this happens, then this happens. So if I went through a little too much too fast, always feel free to shoot me a DM. I'll try to explain it better if I can. Yeah, thank you, everybody. You guys are all awesome. Thank you for being here. Gail, Rudy, Husky, see your names all the time. Thank you. You too, Viral, you're here all the time. Yep, thank you, everyone, and we will call it a night here. See y'all tomorrow. Trade safe for the Friday. Thank you.